Hi friends, how are you all? I hope all of you are doing good. I am CA Harshit KS. I'm a chartered accountant by profession. I'm here to help you out with all the amendments that will be relevant for our examination that is likely to be held in December 2025. So before we start on, dear friends, I'll just give you a very small brief with respect to what is that we are covering in this small session. Firstly, let's say for example, whoever is writing the examination of company secretary executive income tax subject, for them 2024 Finance Act is applicable. So which means all the amendments that came up in the year 2024, that will be relevant over here. Similarly, dear friends, and there are also, what is the act, which is a previous year or which is the assessment year that is relevant? Assessment year 2025 2026, previous year 2024-2025. So for assessment year 2025-2026, whatever relevant provisions that are applicable will only be coming for your examination. That is how this presentation has been made. If you are thorough with this, it's more than enough for your amendments. Okay, friends. And also at the same time, your examination, they have given us a disclaimer saying that all the rules, all the notifications, all the circulars, clarifications, etc., if at all those are also presented or anything has come issued by the central government or CBDT, those also will be forming part of your examination. So that is what this says, dear friends. So clearly they have mentioned December 2025 examination. This is what is the scope. So starting, dear friends, let us move forward with the first amendment, which is something very important, which is something critical for us. Firstly, dear friends, what we have is something called as standard deduction. So what do you mean by standard deduction? If you remember, during our classes, we had a detailed discussion with respect to what is the difference between deduction, what is difference between exemption, at the same time, what is the difference between, deduction is something, exemption is something. Okay, exemption in the sense from or allowance, exempt income. From the beginning, from the source itself, it is exempted. When you say deduction, deduction refers to something that will be deducted from your taxable income. After calculating all your taxable income, you're deducting something. Let me give you an example. I'm just giving you a very quick example with respect to, we discussed totally three things, dear friends. First one was deduction, then we spoke about exemption, then we also spoke about rebate. Rebate is something which will be deducted from your tax liability in itself. When you say exemption, from your taxable income itself, it is exempted. It is not even considered for your taxable exemption. It is not considered for your calculation of taxable income itself. That is what is called as exemption. Deduction means you have calculated your taxable income. From your taxable income, you are deducting certain portion of that. So that is your, from your gross taxable income, you deduct something, then you get net taxable income on which your income tax rates will apply. Okay, so that is what it is. Please be mindful with respect to when we are saying standard deduction. This is something very important, dear friends, especially in the new tax regime. Friends, here also many people get confused with respect to old tax regime, new tax regime. New tax regime is, some of you think new tax regime is an amendment. Old tax regime is before amendment. No. That is not the picture actually. See, old tax regime is also there after amendments. New tax regime is also there after amendments. Okay, but certain provisions in new tax regime, certain provisions in old tax regime, only those change. So that is what you need to be mindful and make a note about it. Here in this case, what is happening, what is that we are understanding here? There is certain enhanced standard deduction under new tax regime. What it is saying, earlier, dear friends, there was a deduction of 50,000 rupees. Now this 50,000 rupees, there was a deduction of 50,000 rupees. This is enhanced to 75,000 rupees. So that is what is a major change that we would be seeing. That is a major change that is being seen, dear friends. Now, basically, where is this deduction applicable? Let us say, for example, while calculating your gross total, let's say income from salaries. You got an income, let's say taxable income has come to probably around 2 lakh rupees. 2 lakh rupees is the taxable income under income from salaries. Then similarly, house property income. Let us assume you got an income of 3 lakh rupees. Similarly, there is some other income. Let's say, for example, you have received an income from other sources, It is around 1 lakh rupees. Now here, dear friends, when you add all of this, the total of this, what is the total of this? 2 lakh plus 3 lakh plus 1 lakh, you are getting 6 lakh rupees as taxable income. So from this 6 lakh rupees, assuming that there are no other further incomes, you are deducting a deduction of 75,000 rupees. Therefore, your taxable income will be 5,25,000 rupees. Now on this 5,20,000 rupees, the rates will be applicable. The slab rates will be applicable in case of individual or respective slab rates, whatever is relevant, those will be applicable. I hope all of you understood, dear friends. So basically here, once again, just repeating, what is this provision telling? This is saying that your standard deduction was earlier 50,000 rupees. Now the standard deduction is increased to 75,000 rupees, and it is to be deducted from where? It needs to be deducted from your income tax, that is taxable value of income. From your income, there is an amount of deduction that is being reduced. So in our example, if you see, our income that came to around 6 lakh rupees worth of income. From this 6 lakh rupees, we said our taxable deduction will be 75,000 rupees. Therefore, if you see, the income itself was 6 lakh rupees. We deducted around 75,000. Therefore, we got a net taxable income of 5,25,000 rupees. So this is what this new tax regime it says. Earlier this 75 was 50,000 rupees instead of 75,000, which got amended. So basically this will be focused upon, dear friends. Please do remember this. This is what is a major change that has happened. Okay. Yes, next one, dear friends, there is something called as family pension deduction. Similarly, if you remember, there is one deduction. Whoever is getting certain family pensions or they were eligible for certain amount of deduction in addition to the standard deduction. So earlier the deduction was around 15,000 rupees. That 15,000 rupees deduction got increased to 25,000 rupees. Let us say, for example, dear friends, let us assume this pertains to some family pension income. This 6 lakh rupees is pertaining to some family pension income. From here, you're giving a standard deduction of 75,000 rupees. In addition to that, you will also give this increased deduction of 25,000 rupees. Therefore, the net pension income for this particular person will be only 5 lakh rupees. So please make a note of this also. Earlier, instead of this 25,000 rupees, what was the amount? It was only 15,000. So this 15,000 rupees got increased to 25,000 rupees. So that is a major change which we see in this particular amendment. Okay, friends, clearly in respect of deductions, two changes. One is some 50,000 rupees standard deduction. It got increased to 75,000 standard deduction. Similarly, in case of family pension, there was a deduction of 15,000 rupees which got increased to 25,000 rupees. So this is one of the change that we can see. Next amendment, dear friends, this is something very critical, dear friends. What we are seeing on the board, that is what we are seeing. Basically, the revised tax structure under new regime. So in new regime, our finance minister has been very keen with respect to changing the rate of taxes every year. Okay, so if you see, again, there is some twist, dear friends. For Finance Amendment 2024, these are the rates. Now for Finance Amendment 2025, this will change completely. Okay, this is going to change. Please do not get confused with 2025 and 2024. Please get yourself restricted to only this rate of tax. Now under new tax regime, how is what did I say? Your slab rate up to 3 lakh rupees is nil. Then for the next 4 lakh rupees, it is 5%. And for 10 lakh to 12 lakh, that is for 2 lakh rupees, it is around 15%. Then 3 lakh rupees, it is 20%. And above 15 lakh rupees, it comes to 30%. Please remember this slab rates, dear friends. This is very critical. Let us solve an example. Let us say, for example, your income is 6 lakh rupees. Let us assume taxable income after all the deductions. Okay, let us consider there is a standard deduction of 75,000 rupees. Okay. Now, your taxable income is 5,25,000 rupees. Now, how do we calculate the tax of this? 5,25,000, how do we tax? How do we calculate the tax? Now, this 5,25,000, look at the slabs. Up to 3 lakh rupees. So, up to 3 lakh rupees, the tax is 0. Now, this 5,25,000 up to 3 lakh rupees, the tax is 0. Next, more than this 3 lakh, how much do we have? I mean, beyond 3 lakh, how much of this 5,25,000 do we have? That is 2.25 lakh we are having. So, we are left, I mean, after deducting 3 lakh, we are left with 2.25 lakh. Now, look at our slabs. What is the next slab that is available? Here it is 0.20 to 3 lakh. Here it is 3 to 7 lakh. Means for the next 4 lakh rupees, the applicable tax rate is 5%. Now 4 lakhs. Here we need to calculate only for 2.25 lakh. 2.25 lakh is less than 4 lakh. Therefore, for the next 2.25 lakh, we have a tax rate of how much? 5%. So 5% on what? 5% on 2.25 lakh. Therefore, if you calculate how much are you getting, you will get approximately 45,000 or so. 45,000 rupees is your tax. Therefore, your total tax, gross tax liability comes to 45,000 rupees. Understood, friends? So basically, this is what it is, the tax rates. The slab rates are a bit different, dear friends, compared to the previous year and this financial year. So these are the slab rates that you need to consider for your examination, which is basically, if you see here, it is very easy to remember. For the first 3 lakhs, then 4 lakhs, then once again 3 lakhs, then 2 lakhs, then again 3 lakhs. So, and above 14. If you add all of this, see, 3 plus 4 is 7, 7 plus 3 is 10, that is 10 plus 2 is 12, then 12 plus 3 is 50. So, just remember this, 3, 4, 3, 2, 3, 3, 4, 3, 2, 3, 3, 4, 3, 2, 3. You can remember it that way. But friends, again, 2025 amendment, this entire thing is changing. Okay, this does not become relevant for 2025 amendment. This is only for the examination that is being written in December 2025. Please make a note of it. I'm repeatedly telling this because suppose if you're writing exam in June 2026, this rates will not be applicable. Okay, your rates are getting changed. So as long as you're writing it in December 2025, please follow these rates, because for you applicable is 2024 Amendment Act. Okay. Is it clear, dear friends? I hope all of you are clear. Next one, dear friends, this is something very important amendment. This is pertaining to your capital gains. First, let me just brief you what do you mean by capital gain. Capital gain, dear friends, capital gain refers to certain gain that is coming when a capital asset is being sold by a person. And what do you mean by capital asset? Any fixed asset is referred to as a capital asset, generally something which is meant for long-term purpose. However, friends, there is certain simplification with respect to capital gain under this new amendment of Finance 2024. Finance Act 2024, very first amendment, what it was. So let's say, for example, in case of, initially, according to, there were two types of capital gains, dear friends. Capital assets were classified into two categories. One is your listed securities or equity related securities, and rest all assets. In case of equity related securities, if at all the securities were held for a period of less than 12 months, it is called as short term holding. Or more than 12 months, it is called as long term holding. The gain that is coming when the sale happens less than 12 months, it is called as short-term capital gain. Similarly, if the securities are sold beyond 12 months, it is called as long-term capital gain. Now, similarly, for certain assets, it's called as basically listed. Here, if you see, for listed securities, it was actually 24 months. So basically, friends, for listed securities or any equity related securities, the holding period has to be 12 months. If it is less than 12 months, it is short-term capital gain. If it is more than 12 months, it is long-term capital gain. And there were earlier before Finance Amendment of 2024, there were certain category of assets, whereas this 12 months period was 24 months, and the rest all the assets was 36 months. Now in new amendment, the 36 month concept has been removed. Okay, any asset that is held for period more than 2 years, that is 24 months, those are called as long-term holding assets or long-term held assets. Any gain that is coming for something that is sold beyond 24 months, it is called as long-term capital gain. Anything that is, any gain that is getting earned when some asset is being sold less than 24 months, it is called as short-term capital gain. In this case, only one exemption, dear friends, that is equity related assets or listed securities. Instead of 24 months, you have a time limit of 12 months. So this is a very simple, I mean, that's why we have given a heading called as simplification of capital gain taxation. Earlier you had 3 periods. One is 12 months period, one is 24 months period, one is 36 months. Now only 2 periods. That is your 12-month period, that is your 12 months period, and second one is your 24 months period. That's all. No 36 months. No concept of 3 years at all. With this, game is closed. So it is simplified. Next one, dear friends. Here, earlier, what it was saying, unlisted bonds and debentures. For unlisted bonds and debentures, see here, it covered only listed securities, dear friends. Anything which is not listed securities, those will be treated as for 24 months or any 36 months. So there was some lack of clarity with respect to when it came to unlisted bonds and debentures, even though these are called as securities. So now here they are saying, irrespective of period of holding, please treat them as short-term capital gain. Simple. Okay, some unlisted bonds, unlisted debentures, you would have held it for longer period of time. Let us assume you held it for 36 months. Even though you held it for 36 months, please treat them as short-term capital gain. Did you understand, friends? Short-term, irrespective of holding period. So that is what the clause says. Therefore, unlisted bonds and debentures, this is the only one exception, dear friends. Of course, I understand they are complicated in this Finance Act 2024, in which they brought this saying that everything, rest all assets, let's say for example, as long as it is listed equity or equity related securities, if the holding period is less than 12 months, it is short-term capital gain. If the holding period is more than 12 months, it is long-term capital gain. Any other asset you take, if the period is less than 24 months, it is short-term capital gain. More than 24 months, it is long-term capital gain. One exception. What is that exception? It is only for this unlisted bonds and debentures. Bonds and debentures issued by an unlisted company, something that is not listed in a stock exchange, that is National Stock Exchange and Bombay Stock Exchange. Anything that is not being listed over here and they issue any bonds and debentures, those are being sold irrespective of holding period. Don't consider 12 months, don't consider 24 months, don't consider 36 months, nothing. Don't consider period of holding at all. Whatever is being sold, treat it as short-term capital gain. And the moment you treat it as short-term capital gain, what will happen? It will go and hit in slab rates. Okay, there is no special rate for short-term capital gain. It hits as per slab rates. However, friends, please note, 2025 Act has certain changes to this. Okay, as of now, please don't bother about 2025 Act. For your examination purpose, restrict it to 2024. Okay, probably once you can go and revise it later at a later point of time. Probably once you clear your examination, you can read 2025 Act. Suppose if you already have studied 2025 Act, it's a major change, dear friends. Okay, please don't get confused. Next one, dear friends, short-term capital gains. There is certain rate increase in short-term capital gains, especially in case of listed equity shares. What is this change? Instead of 15%, it is 20%. Earlier, dear friends, especially in case of listed security shares, liquid listed equity shares, the short-term capital gain tax used to be 15%. Rest all short-term capital gain, they used to follow slab rates. Okay, friends. But in this case, what is happening? The same rule prevails. Short-term capital gains, that is equity, listed equity shares, and rest all equity shares. If it is listed equity shares, the rate of tax, if it is short-term capital, that is less than 1 year, the rate of tax is, instead of 15%, you will have to take 20%. Rest all assets, they will go and sit in slab rates. And however, there is exception to this rule. What is this? This is the second point. Unlisted bonds, unlisted debentures, anything you have sold, irrespective of the holding period, this security should be treated as short-term capital gain. And since it is treated as short-term capital gain, please use slab rates. Clear? Understood. Good. Next one, dear friends. This is basically long-term capital gains. There are certain changes. Yes. Till now we discussed only, we focused only on short-term capital gain. What was short-term capital gain? first of all, there was simplification with respect to period of holding. 36 months concept is not at all there. In 2024 amendment, only two type of concepts were there. One is your 12 months period, one is your 24 months period. What comes in your 12 months period, dear friends? In your 12 months period, listed equity securities or equity related securities comes into picture for listed shares. What comes in your 24 month period? Anything other than listed equity shares or any other equity shares will be coming into the picture. Now, what happens in case of unlisted debentures or unlisted companies bonds? In case of bonds or debentures issued by unlisted companies, for that don't look at tenure at all. Irrespective of holding period, please treat them as short-term capital gain. If you treat them as short-term capital gain, now what is the rate that we need to use? The rate of tax will be according to your slab rates. Only for listed equity shares, the rate of tax is, instead of 15%, it is 20%. Now coming to our long-term capital gain. What is the changes in long-term capital gain? Very first thing, dear friends, if you see, long-term exemption on equity shares and equity order has increased from 1 lakh to 1.25 lakhs. So what it was saying, let's say for example, your listed equity shares or equity oriented securities. So those have been held for a period of more than 1 year. Means it is held for long-term period. If it is held for long-term period, earlier there was an exemption. Please note, this is an exemption, not a deduction. What is this exemption? Up to 1 lakh rupees of long-term capital gain held in the form of listed equity shares or equity oriented mutual funds or any securities that are pertaining to equity linked securities for a listed company. Again, those should be issued by listed company. This is a mandatory clause. In such case, up to 1 lakh rupees, it was exempt from income. Only beyond 1 lakh, whatever is being earned, that used to be get taxed. Here now this 1 lakh rupees has been increased to 1.25 lakh. Exemption has been increased to 1.25 lakh, friends. I hope it is clear. Next one. Similarly, there is one more change over here. The tax rate has been increased from 10% to 12.5% on the gains exceeding this exemption limit. What it said, dear friends, I'll give you an example. Let us say, for example, your long-term capital gain on equity shares is 1 lakh rupees. Now, earlier what did the amendment say? Up to 1 lakh rupees it is exempted, and now this year it is saying up to 1.25 lakh rupees it is exempted, which means here 1 lakh rupees is less than 1.25 lakh. Therefore, this entire thing is exempted. Now, let us say instead of this 1 lakh, I am increasing my income to 1.25 lakh. Now, what is the exemption? According to new revised limit, it is increased to 1.25 lakh. The income of 1.25 lakh which I have earned is within the limit of 1.25 lakh. Therefore, it is still exempted. Now, let me change it. Instead of 1.25, I have earned 1.30 lakhs as long-term capital gain from securities issued by listed companies, especially equity-related securities. Now, what will be happening? Here, the tax rate, how much has this increased over the exemption limit? Minus 1.25 lakh, that is 5,000 rupees. Now, 5,000 rupees is my long-term capital gain. 5,000 rupees is my long-term capital gain. Now, on this 5,000 rupees, there used to be a tax rate of 20%. In case of long-term capital gains, there is no slab rates, dear friends. It is flat. It is flat tax rate of 20%. Now this 20% has changed to how much? 12.5%. They have reduced it. Please note, when you are saying it is sorry, my mistake, dear friends. Coming back to our equity related securities, on this 5,000 rupees, there was a tax rate of 10%. 10%. Now this 10% is increased to 12.5%. Yeah, this is the. It is increased to 12.5%. From 10%, it is increased to 12.5%. Next one here, other than this equity related assets, what is happening? Other than this equity related assets, first of all, there is no exemption. There is no exemption at all. Exemption was available only in case of equity oriented units and equity shares of the company. Now exemption is not at all there. For your assets, other assets, the rate of the tax used to be 20%. Now instead of 20%, they have relaxed it. They have relaxed it to 12.5%. And what is happening over here? If they have reduced it to 12.5%, it's a loss to government. Now, how is the government recovering these losses? So, there is a small change over there. So, what government is saying? Okay, boss, you have reduced the rate. I have reduced my tax rate from 20% to 12.5%. But the condition is you will not get the benefit of indexation. So, basically, what this particular provision is saying is your long-term capital gain tax has reduced from 20% to 12.5%, provided that you do not claim removing of your indexation benefit. So please note about this, dear friend. 2024 Amendment Act is very clear. So long-term capital gain. So long-term capital gain is split into two parts. What is that? You claim indexation. You claim indexation. And second thing is, you do not avail indexation. Do not avail indexation. It is left to the user. You can either choose to claim indexation or you can choose not to avail indexation. If you choose indexation, your long-term capital gain tax is 20%. If you do not choose indexation, means there is no benefit in increase in your cost. There is no benefit for you to reduce your capital gain. Therefore, your tax rate is only 12.5%. So this is a very drastic amendment, dear friends. Major amendment. Pakka 100% sure some question will be coming from this part. Okay, please make a note of it. And here again, now they have given you this benefit. Do not avail indexation. Your tax rate is reduced from 20% to 12.4%. On what assets? On those assets that have been, those sales that is being made from 23rd July 2024 onwards. So this is the third condition here. Condition 1, condition 2. Third condition is 23rd July 2024. Which means, dear friends, if at all you are purchasing any asset and you are selling any asset, you will be getting some long-term capital gain. When you're getting long-term capital gain, ideally you can choose your indexation benefit. Indexation, what do you mean by indexation benefit, dear friends? Indexation benefit means your cost of acquisition is indexed with inflation factors. Let's say you purchase some product in 2000 year. In 2000 year, the cost was very less. Now in 2025, when you are selling something, the cost of 2000 will not be relevant over here. So that cost has to be increased. Therefore, you use inflation factor that is given in your Income Tax Act. As a part of your amendment, you get those income tax amounts, that is inflation factors. Using that, you increase the cost of the asset. Okay, acquisition cost is increased to that extent. That is called as this indexation benefit. So when you're availing indexation benefit, you're getting a tax rate of 20%. But however, the Income Tax Act says, suppose any particular asset is being sold after 23rd July 2024. You have to remember this. There is no option. I don't know how you will remember this 23rd July 2024. That needs to be remembered, dear friends. So if you are selling any asset after 23rd July 2024, you have two options. What are those two options? First option is do not avail indexation. If you do not avail indexation, you will be taxed at 12.5%. If you are availing indexation, you will be taxed at 20%. Simple. Okay. This type of benefit choice given to the taxpayer is only if he is selling something after 23rd July 2024. So this indexation parameters concept comes over there. Friends, this is something very important, dear friends. Please make a note of it. Okay. Yes, friends. The next amendment, if you see, that is coming with respect to your TDS rate, dear friends. First of all, what do you mean by TDS? Tax deduction at source. What is this tax deduction at source? Generally, tax deduction at source means at the source itself, its tax is getting deducted from the, by whom? By the person who is paying the money to another person. Let us say, for example, I am the employer of the company. I have certain employees with me. I need to pay salaries to my employees. When I pay salaries to my employees, I am deducting of tax at the source itself. So which helps me, which helps the government to get the revenue. They need not wait for the taxpayer to pay. They are instructing the payer of the money, income generator to the employees or to any of the people, any of the citizens, whoever is receiving money, the person who is paying them, they themselves will cut the money and pay it to the government. So earlier there were certain tax, there are multiple tax rate deductions, TDS rates, dear friends. As per this amendment, there are a couple of rates that have been reduced. What are those rates? Let us see one by one. So first one, if you see, it is basically called as insurance commission. So any insurance commission that is being paid by the company or any other person, or by the payer of the tax to the person who is earning this commission. Earlier the rate of tax used to be 5%. Now that rate has been reduced to 2%. And with effect from what, dear friends? It is effective from 1st April 2025. This is something important to note it. The second one, dear friends, life insurance policy payment. Okay, here also there is this section 194DA, which says that any payments that are being made in terms of life insurance policy payments, earlier the rate of tax used to be 5%, this is 2%. And similarly, lottery ticket commission. So we understand the sale of lottery is still there, dear friends. However, if you remember, anybody who is winning, who is getting certain winnings from the lottery, those will be treated as under income from other sources and flat 30% rate. You are all aware of that. But however, here what is that we are discussing? We are not talking about winning from the lottery, dear friends. We are talking about somebody who is selling the lottery ticket. For selling the lottery ticket, the person is getting some commission payments. So while making the commission payment, tax needs to be deducted from those payments. At what rate should the tax be deducted? It used to be deducted at 5%. Now it is to be deducted at 2%. This is the change with effect from 1st April. Okay, here if you see, for this insurance, it is only 1st April 2025. Insurance commission, the effective date. Rest all dates are from 1st October 2024. So please remember this, dear friends. So the first one is insurance commission, that is 1st April 2025. The next one, what we discussed about, life insurance policy payment, that is also reduced from 5% to 2%. Next one is lottery ticket commission, the commission that is paid to the seller of lottery tickets. Earlier the rate of tax used to be 5%. Now the rate of tax is reduced to 2%. Next one, dear friends, commission or brokerage. This can be any commission, this can be any brokerage, dear friends. On commission and brokerage payment, TDS rate used to be 5%. Now that is reduced to 2%. Okay, here there are sections, dear friends, 194D, 194DA, 194G. Now the question of students is generally, sir, how do we remember these sections? Yes, dear friends, couple of sections it is advisable to remember. Suppose if you do not remember a section, it is okay. You need not mention that section in the examination. It is understandable that you cannot remember each and everything. If you remember very well and good, it will impress the examiner. But if you are not able, if you are not confident, if you do not remember, please ignore it. At least just write the provision itself. What is that you write in your exam? Lottery ticket commission. The moment in your question, in any of the sum, any of the problem, if they give you lottery ticket commission or probably any commission or brokerage other than lottery tickets, this is. So for that also 5% to 10% the tax has been reduced. Next one, dear friends, rent paid by individuals or HUF. There used to be a tax rate of 5%, that is reduced to 2%, dear friends. Now here similarly there was one section called as 194M, dear friends. Any payments that are being made by individuals or HUF to specified entities, there used to be a tax rate of 5%, that is reduced to 2%. Next one, dear friends, e-commerce operator payments. So there will be certain payments that are being made to the e-commerce operators. So for them, dear friends, earlier the tax rate used to be 1%. Now this 1% tax rate has been reduced to 0.1%. Clear, dear friends? And finally, there used to be something called as mutual fund repurchase. So now it has been removed. There is no need for deducting any TDS. So this is the latest amendment, dear friends. See, in case of TDS rates, I understand remembering section numbers is not critical. They might give you, you can just remember this, dear friends, because there is change. Majorly, if you see everything, the new rate is 2%, except for your e-commerce operator. From 1%, it is reduced to 0.4%. Only that, if you remember, that is more than enough. Okay. And then here this also, with effective from 1st April 2025, with effective from 1st October 2024. This is also something important. They can ask you dates, on so and so date so much commission was paid, on so and so rate so much commission was paid. Since this is coming in between the financial year, it is advisable to remember this rate for this examination. So there is a possibility that they can give you a question in this in terms of illustrative or problematic question, dear friends. Next one, dear friends, this is something very important, dear friends. So basically, see, now we are entering into provision. Till now it was all of individual provisions. Now we are entering into tax payments paid by other entities. TDS was also pertaining to individual. Now when you are talking about partner payments, what is this partner? In any partnership firm, dear friends, the owner, I mean, there will be certain partners who will be coming forward and they would have set up certain partnership firm. So under Partnership Act, any payments that are being made to the partner, so such payments, I mean, Partnership Act permits certain payments to be made to the partner in the form of salary or in the form of commission or in the form of bonus, whatever it is. Now what Income Tax Act says? So section 194T of Income Tax Act 1961, it says that there needs to be certain TDS that needs to be deducted by the partnership firm when they are making any payments to the partners who are forming part of that partnership firm. Okay, so that is what it is. So it is applying to the firms, that is partnership firms or limited liability partnerships, to the partners by way of salary, remuneration, interest, bonus or commission. Whatever name it is called, any payment that is being made by a partnership firm to the partner or limited liability partnership firm to the partner. And what type of payments can they be? They can be salary, they can be bonus, they can be commission, they can be interest, they can also be certain remuneration, anything, whatever it is being made. Such payments, when the partnership firm or limited liability partnership firm is making to the partners, then what needs to be done? There should be certain TDS that needs to be deducted. Earlier this clause was not there, dear friends. Now we have that clause. Okay, this is something, there is a possibility wherein this question can also come, dear friends. How they can ask you? Just they'll ask you to explain what is the tax treatment. You need to clear details, since it is a payment that is happening from the partnership firm to the partner. Whatever payment, this is very easy for you to confuse you in the examination. They can say commission is paid so much, interest is paid so much, or bonus is paid so much, or remuneration is paid so much. Don't get confused with those terms. Whatever payments is made, there should be certain TDS that is being made. But here, friends, there is this threshold limit. How much money? So any payment exceeding 20,000 in a financial year. This is more important. If there is a payment that is less than 20,000, ignore that. For that, TDS is not required. But any payment that is exceeding 20%, TDS is mandatory. And what is the rate of TDS, dear friends? 10% of the payment that is being made. So section 194T, it says that any payment that is being made by the partnership firm, limited liability partnership firm, to any of its partner in whatever name it is called. It can be called as remuneration, it can be called as salary, it can be called as interest, it can be called as bonus, it can be called as commission, whatever it is. On that payments, there should be a TDS of which should be deducted at the rate of 10% on those payments. Again, if the payment is made only 10,000 rupees in a financial year, TDS is not required, because you have an exemption up to 20,000 rupees of payments in a financial year. If the payments are lesser, but however, dear friends, you only tell me in a partnership firm, which partner will get a remuneration of less than 20,000? Obviously, it will be more. If it is more than 20,000, deduct the TDS. If it is less than 20,000, do not deduct the TDS. There is no need to deduct the TDS. That is what this act is. Next one, dear friends. So basically here again there are certain things which says, so what Income Tax Act says, let's say for example, remuneration is paid to a partner. By the partnership firm, remuneration is being paid to partner, or limited liability partnership firm pays a remuneration to its partner. Don't you think the payment of remuneration or salary or interest or bonus or commission is an expenditure for that partnership firm? If it is an expenditure for the partnership firm, it is a allowable expenditure, deductible expenditure. So that expenditure reduces the profit of the partnership firm. When it reduces the profit of the partnership firm, the income tax paid by the partnership firm on such profits will also be reduced. That is why Income Tax Act says there is certain limit to which you can reduce. There is certain limit to which you can pay your salaries to your partners. See, Income Tax Department is not telling the partnership firms to pay less salary. It is saying you pay whatever salary you want. But for the purpose of a allowable deduction, there is certain limit. What is that limit, dear friends? That is what it is saying. So here basically if you see the first thing, well, first of all, what is this section? Section 40B, which talks about limit of remuneration. That is an allowable expenditure. How much can be permitted as an allowable expenditure under section 40B, especially in case of limited liability partnership or partnership firms. So the first one, if you see, if the book profit, let's say for example, the partnership firm earns certain book profit. Of those book profits, for the first 6 lakh rupees, the remuneration that can be paid is either 3 lakh rupees or 90% of the book profit, whichever is higher. Let me give you an example for this, friends, so that you will understand better. Let us say, for example, the book profit, the profit of the partnership firm is 5 lakh rupees. 5 lakh rupees is the profit of the partnership firm. Of this profit, you split it into two parts. That is, on the first 6 lakh rupees, then in beyond 6 lakhs or more than 6 lakh rupees. Here if you see 5 lakh rupees profit is less than 6 lakhs, so the entire thing will come off here. Let us assume instead of 5 lakh rupees, there was a 15 lakh of profit. Now here for the first 6 lakh, that is coming to entire 6 lakhs is here, and beyond 6 lakhs, that is 15 lakhs minus 6 lakhs, that is coming to how much? 9 lakhs. Now your profit is split into two parts. On this 6 lakh rupees, the remuneration that you can pay to the partner is either 3 lakh rupees or 90% of the book profit, whichever is higher. If you see, of this, is 3 lakh rupees higher or 90% of 6 lakh rupees is higher? 90% of 6 lakh is approximately 5.4 lakh. Okay, so obviously 5.4 lakh is higher. So of this 6 lakhs, the remuneration that is allowed to be deducted, allowed to be paid to a partner is 5.4 lakh. And then on the balance portion, it is 60% of the book profit. 60% of this 9 lakh is again once more 5.4 lakh. Coincidentally, the value became same, dear friends. I hope you understood. So basically here what is that I am doing? Your profit is split into two parts. The first 6 lakhs and then the balance portion. On the first portion, you either pay 3 lakh rupees as profit or 90%, whichever is higher can be paid. In this example, what happened? 90% became higher. Let us say for example, here instead of 6 lakh, only 2 lakhs was there. 2 lakhs to 90%, how much will it come? 1.8 lakh. So the maximum means beyond 1.8 lakh, entire 2 lakh can be paid. Let us assume here 3 lakh rupees came. 3 lakh into 90% is 2.7 lakh. Entire 3 lakh if somebody wishes to pay off, also it is permitted because 3 lakh rupees threshold limit is there. I hope you understood this part. So basically friends, this is very clear. This is pertaining to with respect to a partnership firm or limited liability partnership firm. In a partnership firm or in a limited liability partnership firm, any remuneration or any salary, any commission, any bonus or any way of payment that is happening by the partnership firm to the partner is considered as a allowable deduction. Allowable deduction is under which section? Section 40B of Income Tax Act 1961. This section permits the amount paid to the partner to be deducted from your income. Now you tell me friends, partner is considered to be the highest designation. Partner is basically the boss of a partnership firm. So when you are making certain payments to the partner, he takes entire control of the partnership firm. That is why income tax department says, just to ensure that the tax liability of the partnership firm is not reduced unnecessarily. How can a partnership firm reduce its tax liability? What will it do? It will pay more salary to the partner. When it is paying more salary to the partner, it is incurring more expenditure. When it is incurring more expenditure, its profit has reduced drastically. When its profit has reduced drastically, what is happening? Its tax liability is also reduced. Simple. When its tax liability is being reduced, government is losing certain income. That is why there is certain limitation that is being set up by the government, especially in case of what can be allowed as an expenditure in case of partnership firms. So what it says, it looks at book profit. Book profit means according to your books, what is a profit, dear friends? There is a computation. So when you according to your book profit, for the first 6 lakh rupees, the allowable deduction is 50% of that profit, or 3 lakh rupees, whichever is higher. And for the remaining portion, 60% can be the maximum portion. So that is the allowable deduction. It is not stopping the partnership from paying. In fact, for this 15 lakh, entire 15 lakh can be paid as a salary to the partner. Partnership firm do not stops. It only tells, for the purpose of allowable deductions, while calculating your tax, there is certain restriction. That restriction is this amounts, dear friends. I hope all of you understood this part. Next one, dear friends, there is something called as angel tax. This is also something very small provision, dear friends. There is a concept called as angel investors. Who are these angel investors? Certain selective set of investors, especially for startups and all. These people fund a lot of money. They invest a lot of money in a startup. So earlier, for this angel investor, if at all they are getting some, they are buying a share. Let us assume I am a startup. I have a startup. My startup has around 1 lakh shares. Of this 1 lakh shares, 20,000 shares are being issued to angel investors. Now I tell to this angel investor, see boss, my market value, my fair market value of the share is approximately 100 rupees. But I am willing that you, as an angel investor, you invest in my company for 180 rupees per share. That is why those are called as angel investors, because they are giving more money. Means those are considered to angels for the company, something like that. Okay, these are called as angel investors. Income Tax Act, what it was saying, let's say for example, fair market value of my company share was only 100 rupees. Now these investors were actually giving me 180 rupees. Means I am getting 80 rupees more than my 100 rupees of market value. Therefore, on this 80 rupees, there was a certain tax rate called as angel tax. So this was the tax that was given to income tax department. So any startup that was raising funds from the angel investors for a value per share which is more than the fair market value, that excess portion will be taxed under angel tax. Now that has been removed completely. So why it is removed? In order to help startups, to benefit startups to raise more and more funds. So that is removed completely, dear friends. I hope all of you understood. I explained you what is the meaning of angel tax and what had happened earlier, that is before Finance Act 2024. As a part of Finance Act 2024, in order to encourage startups, in order to motivate startups to get more and more fund from angel investors, this angel tax was abolished or removed. So this is one of the important amendment. Next one, dear friends, in case of foreign companies, in case of taxation for other entities, there used to be a flat rate of 40%, especially in case of foreign companies. Now this 40% rate is reduced to 35% rate. So now no longer 40% rate is applicable. What is applicable is only 35% as of now. This is also in order to encourage certain foreign companies to come and invest, and also to make more it's just to make attractive place India as an attractive place to come and operate, so that we have more business, we have more GDP in India. So that is the motive here, dear friends. So this is one of the important amendment. So with this, dear friends, critical amendments, especially under Income Tax Act, which is applicable for your December 2024 examinations, have been discussed. Okay, any questions, any queries, feel free to comment below so that those will be addressed for sure. Thank you, dear friends. Thank you. Bye-bye.